How we doing, everybody? Eddie Austin here. Wanted to jump on and do a live with you guys and talk about what the market looks like today. And I will be monitoring comments on my other screen here. And you guys are welcome to jump in the actual Zoom room that I'm in right now, or the actual Riverside FM. I'm recording this live on Riverside. And like I said, if you guys want to jump in and talk about real estate and what real estate looks like right now, happy to give you guys the link in the chat so you guys can join me. But I want to talk tonight about, kind of what it looks like in today's real estate market with, as we've seen, they're talking about 50-year mortgages, lowering the Fannie Freddie to 620. There's some concerns around this stuff for sure. And I want to think about what ways can we think about this as real estate investors? How can we improve the things that we do in the real estate market? How do we help people out? Because the biggest thing that I see that most people don't understand is what's it look like to be real estate investors, to be savvy real estate investors. What does it look like? How do we do this well? Because I think a lot of people don't think about the exit plan, and that's an issue. It really is. We got to think about what's the exit plan look like. So if you're on Facebook, I did drop a link in the chat to join me on Riverside. You can come straight in the room, and let me figure out how to do this on the let me figure out how to do this here in the live chat. Let's see, can I do it in the live chat on YouTube? It doesn't look like it wants me to do this on YouTube for whatever reason. I can like my own video. I don't know that that's helpful, but it says that. So what I wanted to do was give you it says I can't open my chat panel on YouTube. So that's a bummer. But if you're on YouTube, you can jump on Facebook, and on Facebook, you could come straight in my Zoom or my Riverside FM. So let's think about being a real estate investor. What does it look like to be a real estate investor? When I mean real estate investor, I'm talking about running large commercial properties, running different types of real estate investment, whether that's storage units, whether that's doing development, any type of development, any type of owning commercial properties where you're raising capital through other people's money. What does that look like? How can you bring people on as investors? Do you know what the exit plan looks like? That's where I'm at right now is let's think about the exit plan. What does it look like? Are we thinking correctly about the exit plan? Because if we have 50-year mortgages, what's going to happen with home ownership? Is that going to make home ownership more affordable? It sure seems like it will. But what will it do? These are questions I have. It's a lot of times real estate investors are thought of as these people that have this crystal ball. And that crystal ball is, how do we look at the world? And I think that what we have to do is we have to say, well, if we don't have a crystal ball, we have to come up with ways to be strategic. We have to come up with ways that we are able to see the future at some capacity. We have to be able to, through underwriting. Does anybody know what underwriting means or what that does? Like, we have to engineer what returns look like. So most of the time when we buy a commercial real estate property, we're taking the sale price of what we're purchasing the property for, and say that's divided by a price per door. We're looking at what is our all-in CapEx. What is CapEx? Well, CapEx is your capital expenditures, like the capital dollars, the dollars we raise to do the improvements on the property. Like if we're going to renovate, if we're going to paint the building, if we're going to put new signage out, that's really CapEx. Are we keeping any money back for construction contingencies? In construction, things always go wrong. Like I guarantee anybody listening that's ever done construction, nothing went as planned, nothing went as budgeted. So you have to think about that. And so you got contingency money there. And then you also have OpEx. So what's OpEx? Operational expenses. Are you keeping some money back for operational expenses? These are things that are just safe things you need to put money in the bank for. So I would highly recommend knowing what every one of those buckets look like. And that adds to the price of the property. So if you're paying, let's say $50,000 a door and you're raising $15,000 per door in capital to be able to do all of your different renovations and your CapEx, all your renovations, your CapEx, your OpEx, all that stuff, you're at $65,000 a door. Well, if you're going to sell this thing 5 years later for $70,000 a door, you're not making your investors a lot of money. We try to think about that. You need to have about a 20% yield on cost to be able to get your investors your money back. So these are things that if you're a savvy real estate investor, you have to know these things. So these are just things that I just want to put this out here. I'm educator by trade, and I only educate from a place of knowing what we've done in the past. They were lessons learned. They were lessons learned by things that we didn't do quite right. That's what you don't know that costs you the most. And lessons cost money. Good lessons cost lots. So I like to, take what I've learned and put it out here and educate everybody on that, because I think that the best thing I could ever do is help somebody else be more successful. And maybe I could take the things I've learned as hard lessons and give them to somebody that maybe they learn a not so expensive lesson. So just some food for thought here, just thinking about these things. Think about if you're purchasing a property right now, and say it's a 50 to 100 unit apartment building. If you're buying a 100 unit apartment building right now and you plan to long-term hold this thing, what does that look like? Because if you're thinking about recapitalizing, getting most of your investors out, maybe taking out a few general partners, and then you're going to hold it for another 5 years. Well, think about, usually any 10 to 12 year period, that's when the economy kind of does its own little cycle. So are you going to be selling a property in the worst economy to sell a property in? You have to ask yourself these questions. Like, seriously, you got to ask the question because, I ask a lot of people, what does it look like for your life in 5 years from now? Like, I think everybody should be good at planning. So I ask a lot of people, hey, where are you going to be in 5 years? And they're like, I don't know. I never really thought about that. I think that everybody should start thinking about where you're going to be in 5 years. I'm not talking about like what house you're going to live in. Maybe that is something that's important for you, but like financially, where are you going to be in 5 years? That's the thing I repeatedly asked myself as I was growing up was, where am I going to be in 5 years? And I really did want to know where I'm going to be in 5 years, like financially, with my career, all these things. I was always working towards a goal. And I think that everybody should think like that. They should think, hey, how many things do I need to do to get to X, like to get to this goal? So as we, look at investing per se, we need to think about where are we going to be in 5 years? What's the cycle going to look like? What's the economy going to look like in 5 years? Will the S&P 500 still be roaring, or will it have blown up and lost half its value? Will Bitcoin still be here? All the blockchain that's talked about, is it going to be as strong as what it's portrayed to be? Are we going to see the the words elude me. Are we going to see all these data centers that just pull down the grid so much that power becomes unreliable in the United States? Like I've heard a podcast the other day that was talking about a gentleman that does the generators, and in generators, like they're selling a ton of them because they're selling it on the fear of all these data centers and data farms and crypto mining um, server farms that are doing the Bitcoin mining, like they are physically just sucking on the power grid and making the grid system unreliable. So if I got any friends out there in the co-op industry, electric co-op industry, I'd love to hear from you. I listened to a podcast today about somebody talking about renewable energy through, how long is it going to last? How long is renewable energy going to last? That's why oil and gas maintain to be strong, and big emphasis on gas right now. Like natural gas is being as a use for running generators reliably. So they're using generators to run on natural gas to help with producing power for their oil rigs and other things they're doing, so to be totally efficient in their process. So if I got any of those people out there that's in the co-op, I'd love to hear from you. What your thoughts are on all these data centers. Like they suck a lot of power, and also global warming. Like some of these server farms and data centers, they put off a lot of heat. So what's that heat going to do? It's going to have to be vented out of the actual physical buildings. What's that look like? So there's a lot of questions that we should be asking ourselves. And just like electric cars. Electric cars I thought was going to be a fad. They're pretty well here. They're doing their own thing, but what's solar going to be in the future? What's electric cars going to be in the future? All these questions are things we should be asking ourselves as, people that are looking for returns on investment. Are the things that we're doing now helping us or hurting us? And, how can we either join into the good fight, or how do we, figure out how to do this a different way? How do we look at the world? I think the first question we have to ask, though, is what's it look like in 5 years? And if what's it look like in 5 years can't be answered, then maybe we should think about what we can do today to answer it differently. How can we be a part of the solution instead of part of the problem? So that's just me on here giving a rant about that. This all started as, kind of real estate, commercial education, and talking about, hey, if you're thinking about buying a 100-unit deal and you're going to exit this thing in 5 years and give your investors a majority of their money back, then are you going to be able to do that? Will you be able to do that? That's the question. And then if you refinance it and kick it out another 5 years, if your loan is a 7-year loan and we go into a pretty deep economy crash, then are you going to be forced to sell it? Like there's a lot of fear right now in the market because a lot of people that invested in a lot of multifamily value add have not got a return on their investment. And they're almost being told to sell properties now because they have to sell their property because their loan is expiring. Now they're giving loan extensions or doing a lot of different things. These are all questions. I always tell everybody that ever invests with me or people that's thinking about investing with us, you need to educate yourself on this stuff. And if you can't find the education, then ask the person that's offering this investment. They should be able to tell you every in and out, every concern, how they mitigate risk. All these things should be front and center. Like they should be able to answer them just right off the top of their head, like what they're paying price per door, how much money they're putting into it, what's the rent premium, and then what can the market handle? That's another question I wish more operators would think about is what can the market handle? A lot of things throughout COVID, people were doing investments and saying that they're going to get 5 and 7% rent bumps. Well, you see where that landed us. We're now with people that can't even afford to rent an apartment. And there's a lot of people that are going more to low income housing because it's just getting too expensive. But it's because we raised the rent so high. So we did a rent study one time to think about what would it look like if we would have never followed the COVID initiatives, and when they were printing money, we could get a lot more per door, or a lot of operators did get more per door on the rent premiums. Like they would raise the rent premiums pretty high, but they could do that because the government was printing money. And when that money was in the economy, it gave people the ability to afford a nicer apartment building and afford a nicer place to live. Home ownership, they bought more expensive houses, but they were betting on, hey, I'm going to get this money. So if I get this money, I'll be able to afford it. But the money ran out. They quit printing money. So we did a rent study like back to 2018. And we took that and we went all the way out at like 2.5% per year. 2.5% per year means that when somebody renews a lease, so a lot of people, when they rent an apartment building from us or from other people, they would sign a lease, a 12-month lease. Well, that 12-month lease, say they were paying $850. And when they renewed 1 year later, we would bump the rent 2.5%. So if we kept that cadence all the way out to where we sit right now, the rent would be here. So if the rent is here, and this is where it was, we can formulate a trend line, but we can tell from all the things we've seen that the rent went like this. It went up, and now it's starting to come back down. And we're actually seeing that the rent is a little bit below what the projections are, what the trend line is. So that being the case, a lot of people bet that big bump was going to keep going up and it was going to soar, and it didn't. So a lot of people made a lot of bets and thought that they were going to make their investors a lot more money, and they haven't been able to do that. So, I'm no expert on the stock market, but it sure seems like that thing is getting pretty overinflated right now. And this could be because Trump's tariffs are bringing a lot of business back to the United States. And when business comes back to the United States, naturally, everything being consumed and pumped into the economy, the S&P 500 goes up. Everything that's in manufactured here in the United States would naturally increase the revenue of that, and that would increase the stock prices, and companies' internal value would go up, and your S&P 500 would go up. So I don't know. Maybe that's what I need to do. I need to have a guest on the podcast to talk about exactly what's driving the stock market right now. I know a lot of people are invested in crypto, and they feel that crypto is going to be the digital currency of the world. But is it? We don't really know. I think there's a lot of speculation out there. I know that there's a lot of speculation out there. I also know that there's a lot of investors that are definitely concerned about getting their money back that's previously invested. There's people that are concerned about investing today because they're not really sure what's going to happen in the future. I got a pretty good idea what I think is going to happen. That's why we're going so bullish on the things we're doing, because we believe in the market. We believe that investing in the United States and investing in small town USA, especially middle America, right in the interstate of America, it's going to be a strong boom. Like North Georgia, I've never seen so much industrial space in my life coming to North Georgia. And even the Southern Tennessee market, middle Southern Tennessee market, there's a lot of industrial space going in. There's a lot of factories going in, a lot of warehouse space going in. All that creates jobs. And when it creates jobs, people need a place to live. So these are all really, really good economy drivers that are helping out our economy for sure. So, these are things that I think that more people should talk about, is talking about the world economy on a micro level. And we also have the silver tsunami of baby boomers that are retiring and they're leaving the market. And when they leave the market, it leaves a gap. And that gap is there is people that are owning businesses right now that ran business for 50 years, and the sons and daughters and grandchildren don't want to own the business. They want to do something else. And if that business closes, that's the people that run small town USA. That's the people that donate to the little leagues. That's the people that are in the business of helping the coffee shop, helping the small communities. Like, these business owners are really a huge economy driver. And if we think about that 10 years from now, if they're no longer with us and their businesses are no longer open, what does it look like today? These are things I think we should think about. This is one of the reasons that for the last 8 years, I really thought long and hard about what do we need to do to help in this industry? What can we do to be an advocate, a good steward of capital? How can we help people in this sector? And I've decided, alongside my team of people, we've decided to take this initiative to say, hey, we're going to continue to develop real estate, but we're going to do this completely different. So here's what we do. So we founded a hybrid private equity fund. That hybrid private equity fund seeks to partner with existing businesses that are doing $1 to $5 million. And we come in and we partner with these people. There's a lot of private equity and private lending, private debt that sold tons and tons of high interest loans to these businesses out here. And they're called MCA loans, merchant cash advance loans. Some of these guys are paying $9,000, $10,000, $15,000 a week to these loans. Well, a company like myself and my team can come in and we can help remove that with a much better term by using everyday people's money to put beside ours to invest in these companies and give them a sense of security. So we pay off that high interest debt. We also help them with their bookkeeping. Everybody's in business usually has a QuickBooks account. Well, not everybody knows how to actually categorize that stuff and keep their books right. So we're actually putting in our bookkeepers, setting up QuickBooks the way it needs to be, making sure that the business understands exactly what their expenses are. And then we also come in and put guardrails on the company to try and help them know what the KPIs are, the key performance indicators, what boundaries, what levers we need to pull to make more revenue. So if a business is out here running $1 to $5 million a year and they're making a 10% profit margin, but in that industry, they should be making a 25 to 30% profit margin. That's what we're here to do. So myself, I've done tons and tons of business work with systems and processes. So we put in systems and processes that's applicable to the actual business that we're investing in. And we help the operators come out here and look at your business. How can we make this operate with you? But how do we keep it operating with systems and processes to where we can cross train, we can cross collateralize people inside the business. Everybody's happy, morale goes up. And then at the same time, we're making sure that we look at it from a customer standpoint. We want to make sure that our Google reviews are right. We want to make sure that the public presence of the company looks good. We want to make sure that the customer experience throughout the process from bid to finish, or from foundation to finish when we build something, that it's a good feeling. And then on top of that, we want to also come in and we want to help stuff their top line, because we're not going to stop building. We're not going to stop investing. We're not going to stop building companies or maturing companies in a way that we can exit together. So we're stuffing our experience and our work or income workload, not income workload, but we're giving them our business on top of that. So we're giving them business as well as helping them run the business in the vertical. So to really summarize, what we do is we're a hybrid private equity fund that develops real estate. But when you develop real estate, most of the time you're just paying interest carry. That's all you're doing, is you're just paying interest carry. My investors can make a 30% return per year on their money, but however, they're not getting any of that money throughout the entire development part of the deal. So we're going out and we're buying the mechanical. Well, first we're buying like a sign company, excavation company, mechanical, electrical, plumbing company that all are underneath our ownership and partnership, and our investors get a share of those profits. And then we're developing real estate. So we're providing housing, but we're also providing our investors with depreciation. So that's really our model in a nutshell. So if you want more information, please, by all means, leave a comment or reach out. I'd love to get in touch with you, teach you about the model. And, it's not for everybody, but we have a mission and we believe in this mission, and we're looking for other people to join us in our mission to help save small town USA and help keep these businesses running and still develop housing that's affordable to the market. And that's what we want to do. And we can make this more affordable because we're the general contractor, we're the business owner, we own the land, we entitle the land, and we've developed the land for a fraction of the cost of what it would cost if you went out and got every one of those services by itself. It drives the cost up. When it drives the cost up, and you have to charge more per door to get the money back to your investors or to the bank. So we want to help solve that by making this way more affordable throughout the entire development pipeline. So that's what we do. The company's called JE Capital. You can find it on jecapitalinv.com. And you can go to my website, eddieaustinbex.com. You can book a call with me on there. You can see everything we're doing. You can go to our investor portal. You can see the previous podcasts I've been on. So hopefully this information was helpful, but I would love to get you guys on a live or come to my Wednesday call, 4:30 Central Time. And we talk about things like this. We really do. We talk about these things, and it's free to join. It's on Zoom, and you can check it out on my Facebook page, Eddie Austin BEX. On all platforms, you'll usually find something on there about our live Q&A. But at the end of the day, all I want to do is educate. I want to help people. I want to see people get 2x returns on their money. I want to see people that need housing find it at a better cost. And I want to see people thrive. And if you're out here doing a similar thing and want to collaborate with me, I'd love to help you in any way I can. So we'll see you guys on the next one. Thank you so much for joining me online here and listen to me babble. Hopefully this was helpful for you, and we'll see you on the next one, guys.